Welcome everyone to another episode here at the Inner Wealth channel. My name is Bastian, here with another lecture for you today. And today's lecture is actually really cool, and I believe that is very misconcepted throughout many teachings and recreations of it. And today we're going to be talking all about order blocks. Okay, and as you guys know, a lot of people have their own versions of what an order block is. Okay, you guys may know these order blocks as an institutional candle, point of interest, or POI, areas of demand or supply zones. Man, there's just so many evolutions of what an order block is. Today I'm going to show you the most simplified version of what an order block is. All right, and I want you guys to understand, when you walk out of here, I want you guys to understand why we look at order blocks. Okay, I want you guys to understand that this is the understanding of order blocks will help you with entries and exits. Okay, so first, what is an order block? Well, my mentor is ICT. Okay, most of my teachings and lessons that I've taught you guys have came from his lectures, and from me just customizing it and applying it over the years. I'm an individual that likes to personalize a lot of the concepts that I've learned. I learn the concepts, I apply them, and then once I get them down, I personalize them to my liking and to my plan, right? To my concepts. So that's what you guys are going to see today, is how I personally utilize order blocks. So first, I want you guys to understand what an order block is. So write this down. This is the most simplified version of what an order block is. It is a change in price delivery. An order block is a change in price delivery. There's no other definition for it. I got that from the source himself, the individual that created the order blocks theory. Okay, his most simplified version of it is a change in price delivery. So we're going to be looking at bearish order blocks. Now, what a bearish order block is, it is a up closed candle. Okay, a up closed candle. And I want you guys to understand that. So a bearish, okay, order block are going to be these bullish candles. Okay, and what makes a bullish candle bearish order block? What makes a bullish candle a bearish order block? Okay, and the way that you can understand these and differentiate from a bullish candle, from any bullish candle, to what now we know as a bearish order block, is when that bullish candle offers a change in price delivery. So when we have an up push like we do here, once we have a change in price delivery, we're going to see price trade below that up push or that bullish candle. Once price action trades below and creates a new low, that bullish up push, okay, that bullish candle now becomes your bearish order block. And the only way for it to become your bearish order block is if we trade below it. And we're going to go through a couple examples. Okay. First example is this guy right here. We have a bullish candle. But once we trade below that bullish candle, okay, we have what's called an order block, a bearish order block. And we're going to divide this bearish order block. And I want you guys to understand what order blocks are made of, how they're divided. So check this out. Okay, that is a bullish wick. Okay, an order block is divided by 3 levels of resistance. I personally only use one, but you can use all 3. I'm gonna let you know all 3. Okay, first one is the low. The low of that bearish order block or bullish institutional candle that gave us a change in price delivery. Okay, that bearish order block, that low will act as a level of resistance. The opening of that bearish order block will behave as a level of resistance for price, and equilibrium will act and behave as a level of resistance for price when it comes to an order block. Now, when price trades below it, so this is a push upwards, only when price trades below, okay, and creates a new low, will all of this come into play. If price does not trade below it, it will more than likely just continue to the upside from it. Okay, so that all has to make sense. Okay, so now we got this up push. Once we trade below it, do we validate it as a order block, as a bearish order block? Okay, so then you have the open there. Give me a second. The opening there. We trade below it, come back into it, right? And then we respect it with the bodies. That's a good order block. Okay, that one right there. Then we have this whole up push here. We trade below it. Okay, this is an example of when the whole up push consists of multiple candles, and that is still considered one order block. Okay, it's one push up that changed the price in delivery, the delivery in price. Okay, one push up that changed the delivery in price to the opposite direction. Okay, so that right there is what we call an order block. Okay, bearish order block. Once we trade below it, we come to the open. Notice we trade below it, come to the open, respect that whole push up, then mitigate to the downside. Then you have an order block here. Yeah, that may be a little bit smaller, right? But remember what the order blocks are. Okay, the levels of resistance of them are the low, the open, and 50%. You guys see how we came into the low here, trade into it, then below. Okay, we have this whole up push here. Once we trade below it, we come back into it, right? We come back into it right here. Then we trade below again. Okay, so then we trade into the opening of it. Okay, we trade below it. Then what happens over here? We trade into the low of that order block there. The low, we trade into the low right here. right there. Okay, then we trade below this up push here, and we trade below it, and then what happens? What happens? Price trades beyond, okay, giving us a change in the delivery of price. Okay, and so sometimes you have to step away when you see a break. This is what I consider a break in structure. And when you see a break of structure, when I see any break of structure, I always go to one time frame above. That is a huge gem. I'm gonna let you guys write that down. When I see a break of structure, I always go one time frame above to verify what I'm seeing. So we were on the weekly, now we go to the monthly, and what do we see here? That's where we saw the break of structure down here. And what do we see here? A whole up push. That's your whole order block. What happens? We trade below it. We come back into it. Okay, and then respect. So all we were doing here on this bullish break of structure on the weekly was coming up here, then rejecting to the downside. And as you guys can see here, once we trade below it, notice we trade below the low of this whole order block. Here on a weekly, and we come to the opening. We trade below it, come to the opening, then reject to the downside, right? Then price does it again. Lower low, lower high, lower low. What happens? We trade into it, and then we trade beyond it. Cool. But what did we come back to? So when we see a break of structure, what's the rule? Right? We go one time from higher. Okay, here's our break of structure. And then what do you guys see here? That whole up push, what are we coming back to? We're coming back to that whole up push right there. We come back to that order block, and now begin pushing to the downside. Okay. We have this whole entire up push here. Me personally, I don't look at very large ranges of up pushes. I just follow the smaller ranges. Like, I won't mark this whole thing as an order block, even though it is probably going to be on the monthly perspective. I don't mark that whole thing. Okay, I just follow price action, right? And we have this up push here. Okay, once we trade below it, look at the opening, come into it perfectly. And then what happens to price? Rejects to the downside. Okay. The order block theory, obviously, the bigger the time frame, the stronger the order block will be. That goes without saying that the bigger the time frame, the longer it will take to mitigate out of that area. Okay. So let's go through a couple of bullish examples and we'll wrap up this lecture here. Bullish examples. Okay, right here. Notice we have this whole down push here. Price was delivered. We trade above it. we come back into it. So I'm going to mark up the open. Write this down. Okay, write this down. In a bullish price action, okay, in a bullish price action, the bearish order block, let me say this a lot better. In a bullish price action, every bearish order block will behave as support for price. Let me repeat that again. In a bullish price action, every bearish order block will behave as support for price. And vice versa for bullish order blocks. Okay? Or vice versa for a bearish order block. Okay? When we're looking at bearish order blocks up here. A bearish order block, once traded below it, okay, and only, this is important part, only once we trade below the bodies, okay, only once we trade below those bodies, a bearish order block will be a level of resistance for price, for current price. Okay, so the opening of that, the low, the opening, and 50%. The low, the opening, 50% for bearish order blocks will behave as resistance for price, for current price. Likewise with a bullish order block. In bullish price action, once we trade above it, the bullish order block, the high, the opening, and 50% will behave as support. Okay, so this whole, we trade above it, down below it. Write this down. Previous areas of support and resistance, previous levels of support and resistance can be played multiple times. Previous areas of support and resistance can be played multiple times. I'll show you guys here. We have the high, the open, the middle, the 50%. Now, one thing I will tell you guys, it's 50% of the body. Second thing I will tell you guys, I mainly only use the opening. Okay? I don't trade all three of them, the low, the open, and the middle. I mainly only use, and you guys will mainly only always see me use the opening. I don't see anything wrong with using all three. I don't see anything wrong at all. It's just like what I personalized to my trading plan. I mainly only focus on the openings. Okay, so we trade above it, come back down into it, and notice this down push here. Do you guys notice how this order block here lines up perfectly with our previous open? We trade above it. We trade back into it here. Notice that. Comes back to that level of resistance. I'm in support. Previous area of support is lining up with our newfound support, which would be this candle right here. Right? So that's confluence. That's when multiple confirmations line up at the same level, supporting the same bias for bullishness. We trade above it, higher high. Come back down into it. Notice right here. Okay. We trade above it, come back down into it. We just come right back to the open. That whole down push. Check that out. Okay. We trade into it. We trade above it. Notice. Very, very important. This is your entire down push. We don't always make it to the very medium or all the way down to the very last candle. Again, this is why I focus on the openings. Check this out. price action trades above with this candle, trades above, and then the very next candle does what? Comes down, trades into it, uses that level as support, and then trades beyond it. Higher high, higher low, higher high. Once we trade above that bullish order block, we come to the what? The opening, and then we reject. Then we have higher high, higher low, higher high. Once we trade above it, we come right back down into the opening, respect, and push to the upside. Okay? I'm imagining that that's making a lot more sense to you guys now that we went through that whole bullish range. Okay? So, with that, guys, you guys already know that I like to make these very, very easy to digest, very, very easy to understand. Now, I know that this video may bring up a lot of questions. Okay? And so I want you guys to drop those questions down on the comments. Your guys' questions, comments, and observations will really dictate the flow of this course. I'm going to continue to pump out content, but I just want to make sure that I'm being clear on the breakdowns of what these order blocks are, and not just these order blocks, but these concepts. I want it to be clear for everyone to understand these concepts. Okay? So with that, guys, I'm gonna let you guys go. Drop down below any comments, questions, or observations that you guys may have. What videos you guys would like to see more of. Again, this isn't the last time we're gonna touch about order blocks, imbalances, liquidity. We're going to touch and go very much detail into everything, and how we're going to put everything together that we've learned so far into a couple lessons and of application. But I want you guys to understand the raw content, the raw understanding of each principle and each confirmation prior to us putting it all together. Again, what are we doing? We're building a very, very strong foundation for you. Okay? So with that, guys, I'm going to let you guys go. Love you guys. I appreciate the love, support, and everything that you guys do. Your time being on these videos means the world to me. I will continue to do this for you guys, and we'll catch you on the next one. Peace.